Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm your trader next door. In this video, I'll be analyzing the chart of USD CAD, US dollar, Canadian dollar. So if you're watching my videos for the first time, then please subscribe to my YouTube channel for regular market analysis. And do not forget to check out the Forex analysis playlist for the analysis of other currency pairs. So let's get started. So this is the 4 hours chart of US dollar Canadian dollar. Yes, this is my favorite time frame, 4 hours. Okay. And as we all know, after the FOMC meeting, market became very volatile and currency pairs like Euro USD, GBP USD saw some heavy selling pressure, whereas currency pairs like USD CAD and USD CHF saw extremely buying pressure. This thing happened, market became volatile because after the meeting, the US dollar became very strong. You can see that this is the chart of US dollar currency. Okay, this is the chart of US dollar currency, and this is a daily chart, and just look at these big fat green candles. You can easily understand the buying pressure. You can easily understand the strength of the dollar, okay, in the last trading sessions. Okay, as a result, uh, euro British pound became very weak, and on the other hand, USD CAD, USD CHF got extremely strong. So right now we can see that dollar is on the up run. Dollar will be going up, and we have a resistance in the US dollar currency at 93.35 level. We have got resistance at this level. Okay, and if we look at the present trend of the market, then we can easily see that bulls will be dominating the market for some time, and they will be taking the market upward. And as the dollar is extremely strong right now, therefore we can also expect that USD CAD will also stay bullish. As we all know, overall the trend, okay, overall the trend of the USD CAD was very much bearish. Okay, it was in a downtrend. After that, USD CAD was trading in a particular range. Okay, after that there were some big sudden moves, and right now see, boom. And right now you can just imagine what is the buying power. And surprisingly you can see that this is the USD CAD meter. Okay, and as we all know, retail traders, okay, 90% retail traders lose money, and surprisingly and shockingly, okay, retail traders have shorted USD CAD. You can see here, okay, you can see here that 76% traders, okay, in this bullish market, okay, in this bullish market, 76% retail traders have shorted. Okay, only 24% have taken long position. Okay, on otherwise 76% retail traders are in the opposite direction, and this is the reason people lose money in the market, and after that they just blame the market and this is gamble, okay, this is bullshit. Okay, it's not, market is not bullshit, it's your bullshit decision that makes the market bullshit. So that's why I always say that always stay with the trend, do not go against the trend. Okay, and right now you can see that this is the USD CAD here, and most of the retail traders who have initiated short position are in a loss of average 177 pips. Okay, and they have their average position was at 1.2778. Where is it? Okay, USD CAD one average long. Okay, sorry, average short position. Okay, sorry, their average short position 1.2292. 1.2292. Okay, most of the traders have shorted the market here, and after that just look at the upper. Okay, so this is the main mistake traders make in a market like this. They assume that market has reached the top, reached the bottom, and they just do the opposite. Okay, just keep in mind that we do not decide the direction of the market. it is the big players, they decide the direction of the market. And if you want to become a profitable trader, then you will have to understand the market psychology. You'll have to follow the footprints of the big players. And if to follow the footprints of the big players, you'll have to always stay with the trend. Okay. And what do you see right now? Okay, we can easily see that, okay, market is right now very bullish. Market is in strong uptrend, and if I tell you that we should short the market right now, then this would be a big blunder. Because if we just look at the chart, then we can see that, okay, we have a resistance at this price level. Apart from this price level, we do not have any other resistances here. And if I take you to the 1-day chart, in the 1-day chart we can see that market has almost reached the resistance on the daily chart, and right now it is almost trading at the daily chart. Okay, so there is a little bit possibility that market may see some selling pressure, or market may retrace a little. But looking at the present buying pressure in the market and looking at the present strength of US dollar, okay, if we short the market right now, that will be a big blunder. Okay. And if we look at the weekly chart also, overall the trend of the market is towards the downside, but things have changed right now. Okay. Therefore, what should be a strategy then? Okay. Generally, as I always say, okay, we should follow the trend. Overall the trend is towards the downside, but after the FOMC meeting, after actually right now everything has changed. Every resistance, every support is gone right now. Every support is shattered, every resistance is shattered right now. Things have changed right now. Therefore, we must, and you can see, as I always say, we should always look for area of value. And right now there is no area of value. There is no proper support in the market. Okay, and there is no proper resistance also to short the market. Okay, therefore, in this type of market, the only trading opportunity is to follow the trend and just wait for the perfect pullback. So you can see that stochastic RSI is indicating that market is in overbought zone, and market is also heavily bullish. And as we have just seen in the daily chart, market is just standing at the daily resistance here. Therefore, let the market open on Monday and just see how the price behaves, where the price goes. Okay. See, market is in overbought zone, therefore it will come down. Market will have to come down to pull off. Okay. Till then, do not take any risk. Okay. Let the market open on Monday and just see how the price is doing. Try to understand the market psychology. Okay. And when the stochastic RSI will be in the oversold zone. Okay. Stochastic RSI will be oversold zone, then just observe the price. Try to read the market emotion. If you see that the bullishness is still there in the market, bulls are still dominating the market, okay, then you will understand it easily. Okay, then you can you can go for long. Once you see that stochastic RSI is about to go up and market is under the influence or the dominance of the buyers, you can go for buy order. Let's say market open, like market opened on Monday, okay, it started coming down, okay. Stochastic RSI is also coming down, and stochastic RSI has ultimately reached the oversold zone. After some time, stochastic RSI will be in the up move again. Okay. Then just look at the position of the price. If you see price taking here, support here, here, and you will understand with the body language of the candles. If you see that market is not in the mood to go down, okay, then okay, you'll get the indication that yes, market is still in the mood to go up. Market is still looking for opportunity to go up, and you can go for the buying option. And on the other hand, if market comes down also, then also do not short the market, because market is extremely bullish right now. Okay, in case market falls also, then avoid the market. Do not trade, but still do not trade against the trend. Okay, because we have seen, okay, what are the consequences if you go against the trend. See, this is the sentiment meter of the retail traders, and just see how badly the retail traders are in loss right now. Therefore, stay with the trend and trade wisely. So hopefully you have understood. If you have liked the video and found the video informative, give a thumbs up and subscribe to my channel